audit. This we thought this topic will be very much useful for us, and so I request you to have that session, sir. Thank you very much. Over to Secretary, sir, for formal introduction of the speaker.
Happy and a pleasant evening to one and all. It is great pleasure for me to introduce our today's speaker, who is going to handle the session on TDS updates. CA Dr. Venkatesh, born in an agricultural family of Mamanahalli village, Chitradurga Taluk, Karnataka state. He passed commerce graduate from Mysore University and law graduate from Bengaluru University. He has done his articleship in one of the leading chartered accountant firm in Bengaluru. He is practicing as a chartered accountant from the year 1986, a well-reputed firm in Bengaluru. CA Dr. Venkatesh is a tax consultant for leading cooperative banks in Karnataka. His professional specialization in the following areas: taxation of cooperative banks, taxation of NPO non-profit institutions, survey, search, and seizure. He was president of Karnataka State Chartered Accountants Association in the year 1998-99. He was the vice chairman of All India Federation of Tax Practitioners, South Zone. With these few words, I introduce CA Dr. Venkatesh sir before this virtual forum. Now the session is yours, sir. Thank you. Sir.
Sir, please unmute yourself, sir.
Hello.
Yes, sir.
Good evening to all the members of Madurai branch of SARC. At the outset, I'll thank the chairperson of the branch and other office bearers of this branch for giving this opportunity to share my views on the TDS, TCS and update. Friends, I have chosen this subject thinking in 2 points in mind. One is, now we are doing tax audit of the business associates, where you have to look into the aspects of some TDS coverage, TDS issues, and also you are an advisor, you want to advise the client, that also I cover. Friends, today I want to coverage the Finance Act 22. What are the amendments that I am going to cover? Friends, for information, there are 4 provisions related to TDS are amended, in which 2 are new sections and 2 are amendment, which I am going to discuss. In the Finance Act 2021, there is also 4 provisions related to TDS. There is all 4 provisions related to new provisions, which I am going to discuss in detail in the later. And the Finance Act 2020, there are 6 provisions in that. 4 are new provisions and 2 are amendment, which I am going to discuss. In the Finance Act 2019, I have taken because the very important point which are continued now. There is some 4 provisions I want to discuss, in which 2 are new provisions and 2 are amendments. Friends, I am going to discuss around 7 circulars, which are related to 194R, 194S, and 194Q, and 206(1)H. All these related to latest provision. Some circular issued by the board that I am discussing. Finally, I will conclude my presentation with my views on the TDS provision, Chapter 17B of the Act. I told you earlier, which I told in Finance Act 2022, I am going to cover 4 provisions. That is a 194IA, there is an amendment with effect from 1st April 22. And 194B, there is again amendment, effect from 1st April 22. And 194R is a new provision, which Madam was telling in the beginning. So whether you are going to cover 194R, I want to tell very clearly, I am going to cover 194R is a very important for all practicing chartered accountant. There is a new provision effective from 1st April 22, and 194S, which is also equally important new provision, is all new to all the practicing chartered accountant. That is effective from 1st July 22. These are the 4 provisions I have taken in Finance Act 22 for discussion. Next is in Finance Act 21. Again, I have taken 4 provisions. There is a 194P, which I am going to discuss in little because it is already old provision. 194Q, very important. There is a lot of circulars issued, clarification issued. There is, and next is 206AB and 206A. This is a new provision effective from 1st July 2021, which I am going to discuss in detail. In the Finance Act 2020, there are 6 provisions which I want to discuss. 194A, amendment to section 194A, insertion of a new provision related to TDS on cooperative societies, which I want to discuss. 194J is not much. There is only change of rate of TDS, and 194N is a very important a cash withdrawal TDS by the bankers. What is the impact? After that, 194O, this is a new provision for the e-commerce operators effective from 1st October 2020, and 197B, which is a consequential amendment to the circular. There is also a new section effect only for the limited period from 14th May 2020 to 31st March 2021. It is already over, but I want you to discuss. I want to discuss because it's some of the things which may be some issues impact on the other thing. After that, new provision 206 TCS 1H, new provision introduced with effect from 1st October 2020. That's also I am going to discuss. In 2019 Finance Act and earlier years, I have taken, there are 4 provisions. 194 IB, there's an amendment. What is the amendment? What are the necessity of that amendment, which I am going to discuss. Then 194 IC is a very important. All practicing chartered accountants should very carefully read this provision amendment. How is impact on the other business associates? Then 194M, new provision, and 194N is also a new provision introduced. This is also related to cash withdrawal from 1st September 2019 to 30th June 2020. This is only limited period of this much. Friends, I'll state first from 2019 onwards, I'm going to discuss. What I told is Finance Act 22, 21, 20, 19. Now I'm going to discuss first 2019 and earlier year, what are the changes. Friends, I told you 194 IB, a new section, payment of rent by a certain individuals or HUFs. In this, one second. This is effective from 1st June 2017. It says that any person is paying a rent. You know, 194 IA is rent payment in excess of 2,40,000 in a year. Then TDS is attracted only if in case of a business associate who covered under 44AB, it is covered. But this is rent which is exceeds 50,000 per month. It is a different provision. It is applicable to any person, and TDS is at the rate of deducted at the rate of 5%, and deducted not every month, it is deducted only last month of the year. In this case, another special important is there is no PAN number is required, only the PAN number is required of the recipient as well as the payer. If it is there, then 194 IB is attracted, in which you have to deduct TDS at the rate of 5%. Rent is 50,000 per month. Here is word used any person. He is not necessarily a business associate. Individual HUF whose turnover is more than 1 crore or a profession is more than 50 lakhs is only for limited purpose of 194 IE. But in case of 194 IB, there is no such requirement. Even though you are a salaried employee, you are not claiming rent as a deduction. But if you are paying rent is more than 50,000 rupees per month, you have to deduct TDS under this provision 194 IB at TDS at the rate of 5%. This is says only last month of it. It means not necessarily deduct every month when you are paying rent. You deduct all together 11 months together in the month of March. You deduct the TDS for all the 12 months together. Suppose 5 lakhs per month, by 50,000 per month, it comes to be 6 lakhs. 6 lakhs 5% you have to deduct in the month of March and remit to the 3A statement come challan without obtaining a TAN number. TAN number is not required at all. Suppose you are closing a tenancy in the middle of the year. When you are closing tenancy, you have to see how many months you have paid rent, more than 50,000. For that particular months for which you have paid already, when you are closing tenancy, that month, when you are closing tenancy, that month you have to remit the TDS under 194. This is a new provision. Why I am telling is, always we think that TDS provisions are attracted only persons who are liable to deduct tax, are liable to compute the income under the business and profession. It is not so. Even a salaried employee paying 50,000 per month you have to comply with this 194 IB. This is what I wanted to tell you. This is a new provision. This section is applicable to any individual, whether a salaried person or a non-business associate whose income is other than those reported in 194 IA. Rent is for residence or a commercial purpose. Not necessarily only for commercial purpose. Even if you have taken rent for a residence or for a commercial purpose, where rent is more than 50,000, you have to deduct under the section 194 IB. Next section, which is very important, is 194 IC. This is the payment for under specified agreement. It is very interesting. You know, earlier, you will enter into a joint development agreement by your associates with a developer, and they'll pay consideration by way of giving the constructed area or the specific areas, maybe constructed area 70% to the owner, 30% to developer. Some percentage, it depends upon the cities, it varies. You enter into a joint development agreement where you share the final product is sharing the constructed area or sharing the developed layout. Some ratio, maybe 60-40 or 30-70, like that. It is called joint development agreement. When that is referred in 45 of the called specified agreement. In this, what happens earlier, usually, you mentioned that consideration is only sharing the constructed area. After the completion, you will share the area. That is what. But this says is 194 IC, the new provision, it says that suppose you are paying any consideration. One is sharing of the constructed area. Apart from that, you are paying any consideration. Apart from that, you are paying any consideration by way of a refundable deposit or non-refundable deposit in the beginning of the agreement. Take, for example, you enter into an agreement today and say you complete the project for 2 years' time, and your area will be, after constructed the area, will divide between the parties in this 30-70 area. That is fine. Apart from this, in the agreement, it says that you are entitled for beginning of the agreement. When you are signing the agreement, I will pay you refundable deposit of 100 lakhs. If you have mentioned the agreement, how you have to treat on this particular 194 IC. In the agreement, you say, I am going to pay 100 lakhs refundable deposit. After the project is completed, after completing my performance, you have to refund this 100 lakhs. This is one part. Whether TDS under 194C is attracted. Okay. Next is where another same thing, where I'll say, okay, I will give you a non-refundable deposit of 100 lakhs, but after completion of project, if you fulfill all the purpose, then you can retain this amount, you will not necessarily pay back. There is another part of the agreement. There are two types of agreement. One is refundable. In case of a refundable deposit, law is very clear, then you are not necessarily deduct TDS and overhead because it's a refundable amount. After 2 years after project is complete, you are refunding it. Therefore, if it is a refundable deposit, no TDS under 194 IC. But if it is a non-refundable deposit, then you have to deduct TDS at the rate of 10% on this non-refundable deposit on the beginning of the agreement. When you sign the agreement, when you receive the consideration of this non-refundable amount, then that time you have to pay the deduct TDS at the rate of 10%. This is the requirement effective from 1st April 2017. Now I am raising a question for all of you to understand. In the agreement, state that non-refundable deposit is 100 lakhs, non-refundable 100 lakhs, consideration agreed 50 lakhs, whether TDS under 194 IA on 60 lakhs 1%. You know, one more section is a 194 IA, where it says the consideration is more than 50 lakhs other than agricultural land. If you sell any immovable property other than agricultural land, under 194A, which I am going to discuss later, and you have to deduct TDS at the rate of 1%. There is a provision that says 1%. But in 194 IC, this says you have to deduct at 10%. Now, my question is, if the agreement states that non-refundable deposit is 100 lakhs, consideration agreed is 500 lakhs, agreed is 500 lakhs, whether TDS should be deducted under 194 IA on 600 lakhs 1%, or deduct TDS under 194C on rupees 100 lakhs 10%, and balance 500 lakhs at 1%. This is a confusion now. See, 194 IA says that when you agreed consideration in respect of a transfer of a immovable property other than agriculture land, any consideration you pay, if it is more than 50 lakhs, you have to deduct TDS at 1% under 194A. Yes, agreed, 1%. But in case of 194IC, you see the 194IA and 194IC, there is a little confusion and contradiction. In what it says is, here is 194IC says that if you have received any non-refundable amount in the agreement, that non-refundable amount will be subject to TDS under section 194IC at the rate of 10%. It is fine, 10%. But if the agreement says, I am going to pay non-refundable rupees 100 lakh, plus also I am going to pay in agreement, I am paying a 500 rupees consideration, 500 lakhs is a consideration. My question is now, under 194IA, consideration received is non-refundable plus what I agreed 500, totally 600 lakh at 1%. That is one way. Another one is, no, you are under 184IC, this is what you are paying in the beginning agreement. That is the 100 lakh, is non-refundable. Therefore, hit by 194IC, you have to deduct at 10%. And balance consideration, what you are receiving after completion or before completion or what are the agreement, that to be attracted under 194IA at 1%. This is a big question mark, friends, because in TDS provision, I cannot give a clear-cut view on any provisions, because you have to study the facts, study the thing and take the call, which is always avoid future problems, future litigation. This is what I want to say. In my case, this case, I suggest for 100 lakhs, you go at 10%, remaining 500 lakhs, you go under 194A at 1%. That is what my view on this problem. Next, friends, there is a new provision 194M, payment of certain sums by certain individuals or HUFs. You know, individuals and HUFs are liable for TDS under Chapter 17B of the Act only if the turnover exceeds 1 crore in case of business associate, in case of professionals is more than 50 lakh. That TDS provisions are attracted in normally in all the sections. But this section 194M says that any individual or HUF making any payment other than those covered under 194C, 194H or 194J, other than this transaction, it is a similar thing you are paying in a different thing, which is not covered by 194C, 194H or 194J, then whatever you are making payment, that will be subject to TDS at the rate of 5%. Under 194C, actually TDS rate is only 1% or 2%. 194H is 5%. 194J is 10% or 2%. Like that is a various rate. But if it is hit by section 194M, this is my individual or HUF who are not covered under the 194C or 194H or 194J, then they have to deduct TDS at the rate of 5% on a payment made to a resident person for carrying out any work, including labor or purchase of any contract or by way of commission or brokerage or fees for professional services. This section is attracted, but they give a threshold limit up to 50 lakhs payment to a person in that year, financial year is less than 50 lakh, this provision is not attracted. It means if the payment is more than 50 lakh, it is attracted. Take for example, I am constructing a house. I am an individual. I am constructing a house for my personal thing. Usually it is outside 194C. They are very clear. 194C is if anything you construct for a personal purpose, TDS is not attracted. Fine. But if a payment to a contractor in a year is more than 50 lakhs, suppose I tell that you construct a residence for residential property for me, I will pay you 2 crores. And he constructed during the year, suppose 1 crore, I paid 75 lakhs. On 75 lakhs, I have to deduct TDS under this provision at the rate of 5%. This is very, very clear. TDS is attracted on non-business associates also. This is what 194M is an example. Here is 50 lakhs is the threshold limit. Here is whether threshold limit of 50 lakhs is applicable to each payment of expenses covered under 194C, 194H or 194J. What is my question is, suppose all together is only one person is carrying on. Suppose take for example, the contractor is doing contract work and also doing professional work. Everything is responsibility. Then 50 lakhs is the limit. Here is not section wise the limit. It is only person wise. Person who is receiving from you should be less than 50 lakhs, this provision is not applicable. If it is more than 50 lakhs, this provision is applicable. Not the nature of expenditure. It is a payment, person paid to whom, that is important. This section applicable to individual or HF, whether a salaried person, non-businesses, SS is also is covered. Friends, I told you this is what important is payment of certain amounts in cash liable for TDS under 184N. This is introduced from September 1st September 2019. It was there up to 30th June, but it is there, but restated in a different way. I'll discuss that restated provisions later. From 1st September 2019 to 30th June 2020, it is this period, any withdrawal from a bank, whether it is a cooperative bank or a nationalized bank or a post office, you withdraw cash more than 1 crore in a financial year, you have to do, banker has to deduct TDS at the rate of 2%. This is the requirement. It means, suppose that I am drawing a cash from my SB account or my current account or any other account, I draw a cash in excess of 1 crore. I draw some 1.5 crores. 1 crore is exempted, more than 1 crore is 50 lakhs. 50 lakhs to be deducted at 2% TDS rate. That is the requirement cashed upon the bankers. All bankers have to deduct TDS on cash withdrawal, which is a excess of 1 crore in a financial year. This was introduced from 1st September 2019. Here is, this is the accounts maintained by the payee. Person who is drawing, he may be maintaining 1 or 2 accounts in this. All accounts together, 50 lakhs is the, 1 crore is the limit you have to exercise. TDS is applicable only in the withdrawal is more than 1 crore. Up to 1 crore is exempted. More than 1 crore is liable for TDS under 194N. This section is not applicable if the payee is a recipient is a government or a cooperative bank. The cooperative bank withdrawing from another nationalized bank, this provision is not applicable. Or a post office drawing a cash from their bank, it is not applicable. ATM operator, white label operators, or any person may be notified by Reserve Bank of India will not be subject to this provision. Similarly, CBT has a power to clarify the any provisions related, any clarification regarding 194N inserted in the Act is come into effect from 1st September 2009. Hence, no cash withdrawal prior to 1st September 2019 is attracted in one. It means that any cash withdrawal before 1st September 2019, any amount you have drawn, maybe 10 crores, no TDS, but after that, if it is more than 1 crore, TDS is attracted. Means 1 crore is the exemption given for a year. In excess of 1 crore, this you have to deduct. In case of first year, because section was introduced in the middle of the year, there also you have to see up to September, up to 31st August 2019, how much is you have drawn the cash from the bank. If it is already withdrawn more than 1 crore, whatever cash you withdrawal after 1st September 2019, even if you have 10 lakh, you have to deduct TDS at the rate of 2%. But you have withdrawn only 90 lakhs in the earlier period, up to 31st August 2019. Subsequently, you want to draw any amount up to 1 crore, will give exemption, means 90 lakhs already done, plus another 10 lakhs will give exemption. Suppose you draw in the month of September 2019, 20 lakh, 10 lakhs will be exempted, remaining 10 lakhs will be subject to TDS under section 194N at the rate of 2%. This is the provision which is introduced effective from 1st September 2019 to 30th June 2020. Is only for this period, this is the thing. Then after that, in the Finance Act 2020, they introduced restated this section. In that, the 194 restated, in which is effective from 1st July 2020. Up to June, one provision which is very clear. If your cash withdrawal is more than 1 crore, TDS under section 194 at the attracted 2%. Now the new provision introduced, it says very clearly, any cash withdrawal after 1st July 2020, subject to TDS under 194N, but you have to see some of the conditions. Banker is supposed to see some conditions attached to this section 194N. What are the conditions is, suppose you have to supposed to examine whether the person who is withdrawing, whether he is regularly filing the return of income. He is regularly filing the return of income, then no issues. Then cash withdrawal more than 1 crore, 2% attracted. Suppose if he is not filed the return for the latest 3 years, you have to ask whether you have filed the return of income for the latest 3 years. If he says, yes, I have filed the latest 3 years return, no issues. But if he is not filed for any one of the year, he has not filed all the 3 years, he has not filed. The default is for even 1 year or 2 years or all the 3 years he has not filed. Then TDS is a different rate. Threshold limit, that case, non-filer for the latest 3 years is then threshold limit is 20 lakhs, up to 20 lakhs cash withdrawal, no TDS. If it is more than 20 lakhs, up to 1 crore, 2%. More than 1 crore, TDS is 5%. In the earlier stated provisions, I told very clearly, is a more than 1 crore, 2% is the threshold limit is 1 crore. The TDS is 2%, any amount. But is now they have bifurcated. If you are not filing the return regularly, latest 3 years you are not filed, latest 3 for which the due date for filing return of income is over, and you are not filed it, then threshold limit is 20 lakhs, up to 20 lakhs, no TDS. 20 to 1 crore is 2%, more than 1 crore is 5%. This has to be very clear now. Any banker, friends, kindly note the banker, you have to have a updated information in their records. Person who is coming for withdrawing any cash more than 20 lakhs, you have to see whether he is a regularly filing return of income. Whether if he is filing regular return of income, no issue. Up to 1 crore, you can ask him to withdraw without any TDS. But he is not filed any one of the years of the law, latest 3 years, then he has to restrict the withdrawal up to 20 lakhs, no TDS, more than 20 up to 5, up to 1 crore is 2%, more than 1 crore is 5%. This is the requirement. All banker has to take this. Now the banker is simply not only if you go check and say that I want to withdraw 1 crore, they have to see before allowing to withdraw, they have to check whether you have filed the return for the latest 3 years. They have the data in their records very clearly whether you have filed it or not. It means now the duty of the bankers, all the bankers have to record, noted in their ledger sheet, each assessee wise, what is the status regarding income tax return, filed or not filed. If it is filed, no problem. Up to date he has filed, no issues. If it is not filed, but how many years he is not filed? Out of the latest 3 years he has not filed for even 1 year, then you will be coming under this category. Then you have to deduct. Threshold limit is 20 lakhs, 20 to 1 crore is 2%, more than 1 crore is 5%. This is the requirement of this. Friends, I want to now leave it to you, participants. You have any questions? What I discussed so far under cash withdrawals or earlier 184 IC or M. You have any questions? I want to answer. Otherwise, I go on presenting my all 60 slides. Then you have any questions. I think very difficult for you to remember your questions. Suppose you have any questions, you put it in me in the chat box so that I'll see. I'll try to answer. If it is not there, I'll presume that you are very clear about all the provisions. I'll proceed to the next slides. Tell me. Any questions is there?
Yes.
Hi, madam. Can I hear you from the this is regarding good evening. Madam, I have not received any questions so far. All the questions is suited to you only regarding some administrative issues. Shall I proceed?
Yes, sir.
Okay, fine. Anybody have any questions later, you can raise it so that I'll try to answer. Okay?
Sure, sir.
Okay.
No.
Now the questions on 194N, because you don't have questions, I'll raise questions. Whether specified person should collect the details returns filed is yes. Specified person means banker has to collect the details of all the return filed by the account holders before allowing a withdrawal of cash. Whether this provision is applicable to each bank or all banks together. Kindly note, friends, each bank wise is a 1 crore threshold limit or 20 lakhs is given. Therefore, each bank wise you have to see whether this person is an account holder who is come for withdrawing cash, whether fulfill the conditions specified under 184N. Therefore, each bank has to satisfy them. Take for example, I am having an account in State Bank of India Also, as well as in Canara Bank, that is a case. I had to, in both the banks, I had to give the details of my accounts file, return of income file. If it is filed, then both the bank has to allow me up to 1 crore. It means each bank I can allow up to 1 crore this cash withdrawal without TDS. But all banks together, suppose I'm having one bank account in State Bank of India, Bangalore, another is in Madurai, another one is in Delhi. All bank, suppose I draw, then all bank together, if it is more than 1 crore, TDS is attracted. That is what you have to see. All bank together, all one bank, all branches together, not all banks together. Okay, that is what to be. Each bank is independent. You have to examine that. Now is very important provision introduced related to cooperative society. Friends, you know, this cooperative society are not required to deduct TDS if they pay interest to members any amount. Any amount paid to the members, interest paid to members is not subject to TDS under 194A. Subclass 3, subclass 5 is given exemption to members' deposit. It means I am a cooperative society. I am having a 10,000 members. For each member, I suppose I pay 30,000, 40,000, 50,000 or 1 lakh, 2 lakh, like that. I am paying interest. Will not be any TDS at all because in exemption under 194A, subclass 3, subclass 5 exemption. Then what happened is some cooperative banks said that we are also cooperative society. Therefore, we are also exempt from these provisions. 194A subclass 5 is applicable to us also. Therefore, we will also not deduct. This was the contention, this was the argument before the investigator, before the tax officials. Therefore, our Honorable Finance Minister, late Arun Jaitley, amended the provision in the Finance Act 2015, where he said from 1st June 2015, cooperative bank will not be entitled for exemption under this section 194A subclass 3 subclass 5, but they have to deduct tax source. That was the amendment in 2015. It means that cooperative bank paid to the members, they are not entitled for exemption specified under this section. They have to deduct tax source. That is in respect of cooperative bank. Subsequently, there are a lot of by the department officials saying that what cooperative bank, usually big cooperative banks are not paying interest to members. They are paying interest to members, but they are not deducting TDS. Then in the Finance Act days, they amended the Finance Act 2020. They amended the section in which they said very clearly, yes, the cooperative society will make it into 2 categories. Small cooperative society, big cooperative society. Small cooperative means whose turnover is less than 50 crores, don't deduct tax source, you will continue the exemption. In case of a cooperative whose turnover is more than 50 crores, you are not entitled for this exemption. Whatever the interest you are paying to members, you have to deduct tax source. It means that now when you are advising your client, our client is a cooperative society, you have to ask, what is the turnover for year ending 31st March 22? 31st March 22 is turnover is more than 50 crores. For the financial year 22-23, they are liable to deduct tax source on all the interest paid to member. That is the requirement. Kindly note, friends, in case of a cooperative society, your advisor, please ask a question. First question is, whether a cooperative society, what is the turnover? Turnover for immediate preceding previous year. If it is more than 50 crores, TDS provisions are applicable. If it is less than 50 crores, exemption continues. This is what the new provision. Kindly note, this is the effective from 1st April 2020. Here is total sales or gross asset turnover of the cooperative society exceeds 50 crores for the immediate preceding previous year, then 3 provisions are applicable. Here they said very clearly, threshold limit for interest is up to 40,000, normal person, no TDS. If it is a senior citizen, more than 50,000. This is what the threshold limit for persons who are liable to deduct tax source in the cooperative society. They have to follow this. 50 in case of senior citizen and 40,000 in case of others. If it is less than this limit, no TDS under this. This is what the new provision. Please keep that. Everybody is under the impression cooperative society is not necessary to deduct TDS, but you have to see what is the turnover. Depends upon turnover, you have to advise the card. I told you 194J, there is a small amendment. Earlier, under 194J, whether technical fee or a professional fee, TDS was 10%. From 1st April 2020, they bifurcated. any payment towards a technical fees or technical services, royalty is now 2% instead of 10%. In case of professional services, is continued to be 10%. It means earlier technical professional together was only one rate was 10%. Now they said no, technical fee 2%, professional fee is 10%. This is what the bifurcation done in 184J. Friends, this is a new provision. 194O, payment of certain sums by e-commerce operators, e-commerce operator to e-commerce participant. You know, in case of e-commerce operations, there is a big company which is operating this, they call it as a e-commerce operator. Persons who participate, who are buying the thing from this community called participants. Ultimate consumer, but in case of a mediator or in case of any coordinator in between, he is called commerce participant. For these people, there will be a new provision which says that they are liable for TDS from 1st October 2020. What it says is, here is the e-commerce operator are supposed to deduct, participant is supposed to deduct when he purchases the item, he is supposed to deduct TDS at the rate of 1% of the amount. Here is e-commerce operator shall deduct, TDS on the e-commerce participant, the seller, service provider. Is a service provider or seller. At the time, like 194Q only, this is a buyer has to do that. At the time of payment or credit of the sale of goods, service or both, rate deduct TDS at the rate of 1% on the gross amount of sale, goods or a service or both. This is the provision. It means whenever you have that and it is a TDS to be deducted 1%, there is a exemption where no deduction under this section is where the e-commerce participant being an individual or on the HUF, individual family, where gross amount of such sale or service both during the previous year does not exceed 5 lakhs rupees. The turnover is less than 5 lakhs of the individual or the HUF is sales from this participant. From the operator, participant's turnover is less than 5 lakhs in a year, no TDS under this provision. It means this is a threshold limit for this section, only for individual and HUF, not for others. Next is 197B. Friends, you know, during pandemic period, our Honorable Finance Minister Nirmala Sitharaman has reduced the normal rate of TDS to 70% of the rate. During the 14th May 2020 to 31st March 2020, it is a specific period. They said in case of provision under 194, 193, 194A, 194C, all these sections they provided, in which they said very clearly, any TDS to be deducted from 14th May 2020 to 31st March 21, your rate of TDS is 75% of the normal rate. It take, for example, 194J, 10% is the TDS rate. You know, fees per professional services is 10%. But during this period, 14 May 2020 to 31st March 2021, is only 7.5%. It means 75% of the normal rate. This is what the concession given during this pandemic period. They say that you have to deduct only 70% of the normal rate. This is a concession which is available to all the. But in this thing, in this provision 197B, first what they have done is, first Madam has issued a notification in which she said that you are entitled to deduct TDS at the rate of 70% of the normal rate. But there is no amendment in the Income Tax Act. Therefore, Taxation Amendment Act, when they introduced later, Amendment Act and other allied laws amendment, in which they introduced called 197B section, in which they said, yes, we issued circular to bring into the statute book by way of section. Therefore, the section introduced called 197B. In the section very clearly says that your TDS rate is 30% of the normal rate, except in the case of 194N and 192. These two sections are not covered because you arrive the rate in under section 192, you avail the rate in force. Therefore, that will not arise. In case of cash withdrawal, they said very clearly you have to adopt only 2% rate or what a 5% rate. There is no 70% of that. This per 194N and 182, there is no concession. And in case of a during period, any person who is not having a PAN number, Section 206AA says that if you don't have a PAN number, you have to deduct TDS is 20% rate. But during the period, they said that if you don't have a PAN number, it is a punishment for you. You have to deduct TDS at the rate of 20% continuous, not 15% of this 70% of 20%, not 15%. That is not the case. That's what they want to clarify. This is the TCS provision 206C 1H. It is there from 1st October 2020. Here is they said that when a turnover of a seller, a person who there is a seller's obligation, a turnover of a seller is more than 10 crores in a year, previous year, then you have to deduct tax. Say for the year ending 31st March 2020, your turnover of a seller is more than 10 crores, then this provision is applicable. What it says, 1st October 2020 onwards, every person being a seller who receives an amount as a consideration for sale of any goods of value or aggregate such value exceeding 50 lakhs in a year, in a previous year, shall collect tax from the buyer at the rate of 0.1% of the sale consideration exceeding 50 lakhs. Take for example, you have done the turnover, you have sold the goods in the earlier period, but you have not received in your books, is shown as a debtor, but you receive the consideration after 1st October 2020, more than 50 lakhs. Suppose you received 75 lakhs on after 1st October 2020, 50 lakhs exempted. On 25 lakhs, you have to deduct 0.1% as the TCS and remit to the government. Then buyer will get a credit for that. Buyer will get the credit. This is the provision 1st October 2020. When this provision introduced, 194Q was not there. Now I will discuss 194Q. What is the provision? Purchaser is a different provision, seller is a different provision. Both are applicable, who has to deduct? This is the question, 194Q versus 206.1H. But 206.1H is very clear. Your consideration is received is more than 50 lakh. More than 50 lakhs, whatever the amount on that, you have to deduct 0.1%. This is the amount sale consideration. Here is what you receive, important. Whether when you raise an invoice for 100 lakhs, when you receive 75 lakhs, you don't know whether including GST or excluding GST, you are receiving some consideration 75. On 75 lakhs, you are supposed to collect TCS of 0.1% and remit to the government. This is the requirement under 206C 1H. These are the exclusion from 206 1H. Goods specified under 206C 1, 1F and 1G are exempted. Already transactions covered by TDS provisions also exempted. Export sales will not be subject to 206 1H, and by either a central government or a state government or embassy or any high commission, they are also exempt from TCS project. This is the requirement exemption. Now the question is, I have framed some questions for you for the discussion purpose. Here is a whether seller should collect TCS and receipt from the 1st April 2020 to 30th September. I told you very clearly TCS is attracted from 1st October 2020. Any amount collected before this date, the cutoff date 1st October 2020, any amount collected earlier period is not at all required to collect TCS collection rate 206C 1H. It is not required. Whether the basic exemption of 50 lakhs, meaning whether tax to be collected only in excess of 50 lakhs in the financial year? Yes. If it is a basic 50 lakhs, you have to give exemption. More than to take, for example, Mr. A customer has paid 65 lakhs. Is due to me only 65 lakh. He has paid 65 lakh. 50 lakhs exempted on 65 lakhs, you have to deduct 0.1% TCS under this provision. This is the requirement. Each customer is 50 lakh basic exemption is attracted. Whether threshold limit of 50 lakhs is to be reckoned from 1st April 2020 to 1st October from 1st October 2020. Very clear. Threshold limit is attracted from the beginning of the financial year. Therefore, for this purpose, 1st of April 2020 up to September 2020, whatever the You are collected, but you are not liable for TCS. But that for the purpose of 50 lakh threshold limit, you have to include that. Take for example, one Mr. A customer from 1st April 2020 up to 30th September 2020, he has paid 50 lakhs. Already you have paid. What are the amount you are going to pay after 1st October 2020? You have to collect TCS at the rate of 1%. In another case, Mr. Customer B, he has already paid 40 lakhs up to September 2020. He is going to pay another 30 lakhs now. 40 plus 30, 70. 50 lakhs exempted. Remaining 20 lakhs, you have to collect TCS at the rate of 0.1%. This is what the threshold limit is. Starts from 1st April, not from 1st October. Whether this section is applicable to where sales done in the earlier year. Yes, I told you this criteria is what are the amount collected after 1st October 2020 for the sales affected any time in the earlier period, whether related to earlier period or earlier years or earlier 2 years back. If you receive consideration after 1st October 2020, the TCS at the rate of 0.1% is to be collected. Now the friend says, when you are raising invoice, you are not mentioned the TCS in the invoice. How to collect? There is a circular issued by the board. It says that where you already given the invoice, but you are not mentioned the invoice about the TCS. Now they say that you, after this section is introduced, you can raise a debit note or a credit note to the customer and collect this amount separately and remit to the government. You have to collect from the customer and remit to the government. Otherwise, you will liable for penalty, all these things will be there. Now they will come to the Finance Act 2021. Finance Act 2021. Here also I am going to discuss some few provisions. The new provision which is introduced in the Finance Act 2020, that is 194P. This is a new provision. It says deduction of tax in case of a specified senior citizen. Here is the very interesting provision. It says that after 1st April 2021 onwards, now as per this provision, any specified senior citizen means who is a senior citizen more than 75 years of age. Normal citizen is more than 60. But for this 194B, he is a specified senior citizen whose age is more than 75 years of age in any previous year. Then he is entitled to opt under 194B, in which he gives the details to the banker. Banker is supposed to compute his income and deduct tax accordingly. Considering all Chapter 6A deduction, rebate allowable under 87A, banker has to compute the income and find out what is the tax liability, deduct tax under the section 194P or remit to the government. The rate is, you have to calculate what is the rate applicable to him by computing, like an income tax officer, you compute the income of a senior citizen, find out what is his tax liability, that liability you have to deduct and remit to the government. And that is, if you opt under 194P, this senior citizen not required to file a return of income. Regular return is not required to file. Only this, what are the return filed by the banker, it's a fair enough. There is no further filing at all. But for this, there is a conditions attached. What are these conditions? Condition number 1, you should receive the pension from the government through particular bank. You should have pension holder. Yes. And next is, you should have only the income, no other income other than bank interest. It means you have a pension income and you have a bank interest which is received from the same bank where you are getting pension. If you have only these two amounts, then you are eligible under 184P. It means I am getting a pension, maybe a few lakhs in a year. Yes, banker knows that what is the pension. Plus, what are the interest he is paying, that bank is paying. SB interest plus FD interest, what are the interest he is getting from that particular bank, that can be added and declared. Who is not eligible? Number 1, specified senior citizen means it should be more than 75. Less than 75 is not entitled. Next is, he should get pension. Suppose he is not getting pension, he is not entitled. He should get pension and he is having account in the where bank from which he is getting pension. It means, suppose I am having account in State Bank of India, pension account, I have to get interest from State Bank of India only, then I am eligible to opt under 194T. Suppose a person who is getting a pension from the post office and he is having a account in State Bank of India, or he is having account in Canara Bank, he is having two bank accounts. One is near to his house, he is having in Canara Bank, and one in State Bank of India, then he is not eligible. Because he is getting pension from post office, but his bank accounts are in different bank, he is not entitled. Therefore, condition is, he should be more than 75 years age. Next is, he have to get a pension, and where he is getting pension from the same bank, he have to get the interest. Suppose he is having given a SB account interest of maybe few thousand from the other bank, he is not liable or not entitled to opt under 184P. This is the requirement. Kindly note, this is the additional responsibility to additional obligation to the bankers who are paying pension. Then they have to see this. Suppose anybody who goes and say that I want to opt under 184P, then collect information and compute the tax liability, find out what is the tax liability, and deduct tax accordingly, and file the what are the required forms to the central government, and this person is not liable to file the return of income. I told you already, 75 age, pension, no other income is not required to file any return. Next, we will go. This is a very important provision, friends. I think that all practicing chartered accountants should know this provision. 194Q. 194Q is applicable to, is an obligation of the buyer. Obligation of the buyer of goods. The buyer of goods, this section is applicable. This section is applicable from 1st July 2021. It says buyer has to deduct tax source at the rate of 0.1% if the aggregate purchase value of goods excess of 50 lakh. Friends, keep both sections side by side, 206C 1H and 194Q. 194Q is applicable to the hands of the buyer. 206 1H is applicable to the hands of the seller. Okay, these two sections are there. Both are similarly worded, more than 50 lakh, 0.1%. But now you have to see, this was applicable 1st October 2020, this is applicable 1st July 2021. 206C 1H was introduced from 1st October, but 194 was introduced from 1st July 2020. This is a different thing. Now, in case of a buyer whose turnover is more than 10 crores in the immediate preceding previous year, conditions attached to this section is very important. A buyer whose turnover is more than 10 crores immediately preceding previous year, more than 10 crores, and if he is buying any item from any supplier and the purchase is more than 50 lakhs, then you have to deduct TDS under this 194Q at the rate of 0.1% of the turnover, 0.1% of the purchases. Now the question arises, which I wanted to raise earlier, but I thought it is appropriate to raise it now. 10 crores turnover, whether includes GST component. Take for example, one buyer is purchase or his sales is about 9.5 lakh and he is having a GST odd, that is maybe another 2 lakhs rupees. Then it comes to 11.5. Turnover is more than 10 crores. If you remove the GST, then it is 9.5. How to consider it here is whether GST to be included or not to be included. The circular issued by the board, which is mentioned that for the purpose of turnover purpose, you have to include GST also. For purpose of TDS, for purpose of 50 lakhs TDS, you have to exclude GST. This is the clarification given by the board in respect of this 184. I will give the reference number, circular number. Kindly note there is a very important circular which you can refer in any of your presentation, any of your 184Q. I'll give the circular number, which are both, two circulars are there, which you have to refer. Here is the purpose of circular number, I want to please note down. There is a circular number which is relevant to this is there are two circulars which is issued under this provision. One is circular number 13/2021 dated 3rd June 2021, which is given very clearly what are the guidelines to be followed in the case of 194Q. There is a very big circular, 6 pages circular. Anybody is having any issues in the 194Q, please refer the circular 13/2021 dated 3rd June 2020. It gives you some idea how to do, but I have listed some of the issues for discussion purpose, which I am going to discuss with you now. Here is, I told you, here is buyer turnover should be more than 10 crores in a year, then only is attracted, and more than 50 lakhs, then only it is attracted, and you have to deduct TDS with the rate of 0.1%. If they provide, the seller has to provide the PAN number, then only the TDS the rate is 0.1%. If it is not provided, TDS rate is 5%. Instead of 0.1%, it is a 5% because PAN number is not. If the transaction is attract TCS under section 2061H, which I told you earlier, there is a parallel 2061H, another side 194Q. Both the section for buyer 194Q is attracted. In case of seller 2061C, 1H is attracted. Therefore, section says very clearly where transaction is attracted TCS under 206C 1H as well as TDS under this 184Q, then the transaction is only TDS under this section should be carried out, not TCS under 200. It means both the sections are applicable. Then 194Q overrides the 206 1H. Therefore, you buyer has to deduct TDS under 194Q. This is what the provision. Now I want to ask some questions to you to understand all these provisions. Here is issues is A is a seller whose turnover is more than 12 crores during the financial year 31st March 2021 is more than 10 crores. Fine. B is a buyer whose turnover is more than 13 crores during the financial year 31. Because I want to give buyer seller together to understand 2061H or 184Q is attracted. In this A is seller 12 crores, his turnover is more than 10 crores. Mr. B is a buyer, his turnover is more than 10 crores. He is for the financial year in 31st March. During the financial year 21-22, there is a following transaction affected, which is a following transaction determine applicability of section 194Q or 206(1)H. Mr. A sells goods worth of 75 lakh to B in the month of May 2021. Which section is attracted? Here I'm telling A seller sells a good worth of 75 lakhs to Mr. B in the month of May 2021. Which section is applicable? There is a first question, whether 194Q, 1RR, 206(1)H. Friends, kindly note, 194Q is introduced from 1st July 2021. This transaction before the date. Therefore, 206(1)H is attracted. They are very clear because this 194Q was not existing. Next, B purchased a fixed asset worth 100 lakhs from A in the month of June 2020. Here also, whether purchase is a fixed asset or revenue expenses, only after 1st July 2021, this 194Q is introduced. In this case, it is in the month of June 2021, 194Q is not attracted, but in the hands of the seller, 206C(1H) is attracted. In this case, Mr. A has to see that 206(1H) is compliant. Mr. B purchased a fixed asset 100 lakhs from C, whose turnover is less than 10 crores for the ending 31st March. Kindly note, friends, for the purchaser, turnover is more than 10 crores. In this, B is already crossed 10 crores for the year ending 31st March 2020, and now he is buying a fixed asset or any other expenditure, and whether is a like a purchase of goods, which may be purchases, or may the purchase of fixed asset. If it is more than 50 lakhs, then 194Q is attracted. If it is a transaction is after 1st July 2021. Turnover of the seller is no criteria for 194Q. That is only for 206C1H. Next is Mr. B. Turnover is more than 10 crores for the year ending 31st March 2021. And his estimated turnover for the year ending 31st March 2022 is less than 10 crores. Whether 194Q is applicable, I told you very clear. For 194Q is applicable to the buyer whose turnover for the immediate preceding previous year is more than 10 crores. This 194Q is attracted. In case of 206.1H, it is attracted only the seller turnover is more than 10 crores, and it is applicable 1st October 2020. Once 1st July 2020 onwards, where for buyer 194Q is attracted, for seller is 206C1H is attracted. Law is very clear. The 206.1H and versus 194Q. 194Q is overrides the 206.1H. Therefore, 194Q is attracted in the case of this transaction. This is what I want to tell you. Friends, now I'll request, because there's a lot of questions on 194Q. I want, otherwise next is another 5-6 slides are there, which are important. Otherwise, I am having a general topic, which I am going to take up later. Friends, you have any questions on 194Q? I want to seek your issues and also your clarification required on any issues. Please. Madam, any questions?
So maybe you can continue, sir.
Continuing?
You can continue, sir.
I presume that everybody is clear on all the provisions. Correct, madam?
Yes, sir.
Okay. Okay. All right. Other issues in the 194Q is, if the buyer is a non-resident, whether 194Q is applicable. Circular is very clear that the buyer is a non-resident. This 194Q is not applicable. It is not required to deduct taxes under 194Q. Whether the tax is required to be deducted when a seller is a person whose income is exempted. See, as you know, this TDS is required only when the income is liable in the hands of the recipient. In the case where seller is a person whose income is exempted under the Act, whether to deduct TDS under 184. This is a question I am asking. They are very clear. The circular issued by the board in the para 4.2 of the circular, it says very clearly, the income is exempted in the hands of the seller, then not required to deduct TDS under 194Q. Next is whether tax is required to deduct on advance payment. Yes. The 194Q is very clear. Payment or a credit, whichever is earlier. In this case, payment is in advance, then TDS will be deducted under 194Q. Next, whether provision 194Q is applicable to a buyer in the year of incorporation, because the buyer is a first year, he started his business, therefore immediate preceding previous year turnover is nil, 194Q is not applicable. That's what is clarified in the circular para 4.6 of the circular. It very clearly says that it is not applicable, you are not required to deduct active source. Whether the provision of 194 Act is applicable to a buyer if a turnover from his business is 10 crores or less, yes, it is not applicable, because for the condition for 194Q is the turnover should be more than 10 crores. If it is less than 10 crores, no, it is not, section is not applicable. The sales and gross asset turnover from business carried on by a person must be exceed 10 crores. It means my sales or gross asset turnover from business is carried on by the person must be exceed 10 crores. And his turnover receipts from a non-business activity should not be counted for this purpose. Very clear, in the hands of the buyer, turnover or a gross asset should exceed 10 crores. Take for example, a turnover of a person is 5 crores, but he sold some property and he is received a consideration, and the consideration is credited to the or profit from sale of the property is, suppose take for example 6 crores. 5 plus 6, 11 crores, then it is exceed 10 crores, whether 184Q is attracted or not. Answer is no, 194Q is not attracted because the gross sales are a receipt. If from the business is less than 10 crores, then TDS is under 194Q is not attracted. I told you earlier, cross application of 206C1H and 194K, section 184Q is very clear. You override the 206.1H, then you have to deduct TDS under 194Q. This is the requirement. Whether this section is applicable to a professional payment, chart accountant is applicable. Suppose chart accountant makes the payment of more than 50 lakhs to some person, whether to deduct TDS under 184Q. Say no, because this is applicable for the purchase is transaction for payment of purchase of goods. This professional payment is not covered under this section, therefore not required. Whether GST to be included while deducting tax under this section, law is very clear, circular is very clear. GST should not be included for the purpose of TDS. For the purpose of turnover, you have to include the GST. Whether determination of turnover of 10 crores, whether GST and other charges levied in the invoice to be included, yes, it should be included GST because circular clarifies GST should be included. Advance paid, I told very clear, we have to deduct TDS under 194Q on advance payment. This is very important. Where purchases have been made from a seller who has been in various branches at the different states. Separate GSTR number is there. How to determine the threshold limit of 50 lakhs, whether branch-wise or all branches together. Friends, kindly note, this 50 lakhs per person, not for the branches. Therefore, each maybe is having a 10 GST number, but all together, if it is more than 50 lakhs, then 184Q is attracted, not each branch-wise. It is all assessee-wise. Therefore, in this case, all assessed together, your buying is more than 50 lakhs from all branches, then we have to deduct TDS under 184Q. Any purchase return, yes, the circular is very clear. They explained in para 4.8. It says very clearly, any purchase return is there. Subsequently, you are reimbursed the return by way of substituting some other material, then there is no question of any adjustment because you are reimbursing replacing the return goods. That is one. Suppose take for example, you are returning and raising a debit note, credit note, then you raise a debit note, credit note for the cost of purchases. Regarding TDS, you should not reverse. It is not permitted to reverse. That is, TDS is not possible. Purchase from APMC agent. Friends, you know, in case of APMC agent, acts on behalf of the agriculturist as a coordinator and he sells to the trader who are interested in buying, he will sell it. Then in case of any person, trader, buys the item from the APMC agent as a buyer, then this section is applicable. 194Q is attracted and you have to deduct TDS under this provision. This is what the 194Q. Friends, we are going to another two provisions which are also introduced from 1 July 2021. I told you earlier, for the purpose of 194Q, 194N and other things, you are supposed to see the PAN number, filing status of all these people. There is a requirement. But in the case of see this requirement, how to verify other things. Here in the section they have introduced 206AB. It says that effective from 1 July 2021, it says very clearly, tax required to be deducted at source under the provision of chapter 17B, other than section 192, 192A, 190 per B or BB or 190 per LBC and 190 for N. For this section, this 206AB section provisions are not applicable. All other section, you are supposed to follow this. What it says is, following specified person. Who is a specified person? In this says that you have made any payment to a specified person. Specified person means person was not filed the return for both the years. Latest 2 years, he has not filed the return at all. See, I told you in case of 194, you have to see whether he has filed the return for 3 years. That is only for that purpose. But TDS purpose, for all the provisions together, this 206AB says that you are supposed to ask a question to the payee, recipient, TDS recipient from your payment received from you is a recipient. You have to ask question whether you filed the return for the latest 2 years. If he has not filed for any one of the year, he comes under this category. He says was not filed the return of income for both the years preceding the previous year. And TDS and TCS of such person is more than 50,000 in each year for such 2 previous years. It means that he has not filed the return for both the years or one of the years, and TDS and TCS of that person in a year exceed 50,000. Friends, kindly see what is the now requirement of a TDS deductor. Deductor is supposed to see whether the person who is receiving amount from you is filing return of income. Oh, he has filed the return for both the years. Yes, fine. Then you find out whether yes, TDS and TCS in his return of income is more than 50,000. Yes, more than 50,000. Then that is a case. But he has not filed the return for the latest 2 years. One of the years he has not filed. Then you have to deduct twice the rate specified in the relevant previous year of relevant provision of the Income Tax Act. Take for example, under 194C, you are required to deduct at the rate of 1% or 2%. Suppose he has not filed the return for the last 2 years, any 1 year or last 2 years, then you have to deduct twice. It means the 1%, it will be 2% or 2% will be a 4%. Next, twice the rate in force what is mentioned in the Act or 5%, whichever is higher in this. In a given example, I told you 1% is double 2%, but finally it says 5%. It means if a section 206AB is applicable, minimum is 5%, maximum is 2% the normal rate. Take for example, 194J is attracted, normal rate is 10%, then twice the rate comes to 20% or 5%, whichever is higher. It means you have to deduct at 20%. A person who is coming under the section 206AB, it means who has not filed the return for the latest 2 years, both the years is not filed or 1 year is not filed, and his TDS and TCS is more than 50,000 each year, then is called a specified per person. Then you have to see TDS rate is not rated. Earlier, whenever you say anybody asks questions, you say, what is the TDS rate? You will ask which section 184C, 1% or 2%. Now you have to ask one more question, whether the person whom you are making payment, whether he has filed a return for the latest 2 years. If he says yes, no problem. If he is not filed, then you have to say he has not filed. What is the TDS? Is TDS in his credit is in PAN number. If it is more than 50,000, then 206AB is attracted. You have to see the rate, whichever is higher, you have to adopt the rate. This is what the additional responsibility to the deductor. See, 206AB is attracted. Here is where the return to be filed for both the years. The answer is very clear. In one of the years, if it is filed, it is fine. If both the years is not filed, then this is the interpretation. The interpretation says both the years not filed, this section is applicable. If one of the years is filed, then this section is not applicable. That is the interpretation given by some of the experts. And TDS, TCS should be more than 50,000 each year. It means each year it should be more than, suppose 1 year is 25, another is 60,000, then this section is not attracted. It should be more than 50,000. Whether section is applicable to a person who is not required to file return number 139, who has started business year back. Yes, for him, it is not applicable because he is not completed 2 years of this one, therefore it is not attracted. Whether this section is applicable where payment credit as person is less than the threshold limit of TDS. This question is where threshold limit of the payment for each section is a threshold limit. 194C, 194J. In 194J, amount is less than 30,000. No section is not applicable. In that question, whether this 206AB is applicable, very clear. If the amount is less than the threshold limit, 206AB is not applicable. Huh? Then is similarly parallel section under TCS 206AB now is called 206 CCA. This is a parallel to tax collection source for non-filers of income tax return for effective from 1st July 2021. It says the amount received from following specified person. Same specified person means who has not filed the return for both the previous years, and TDS and TCS is more than 50,000. Same here also, and the TCS rate is same, twice the rate specified in the relevant provisions, twice the rate specified in the force or 5%. 206AB, 206 CCA, both are parallel provisions. It is up to 206AB is applicable to the tax deduction source. 206 CCA is applicable for tax collection source. This is what the provision, all the issues what we discussed is applicable also here. Now, friends, come to the Finance Act 2020. There are 4 provisions which I want to discuss with you. Now, one is 194IA. I told you earlier, 194IA was introduced in the Finance Act 2013. The section when is drafted first, 194A is very clear. They say that any transfer, any consideration paid for transfer of an immovable property other than agricultural land, if it is more than 50 lakhs, then buyer is supposed to deduct TDS, collecting the PAN number of the seller and deduct TDS at the rate of 1%. This was a provision from 2013 to 22. It means consideration mentioned in the sale agreement or sale deed, if it is more than 50 lakh, then you attracted this provision under 194A at the rate of 1%. What is this Finance Act 2022 has done is 194A attracted even though consideration mentioned in the agreement may be less than 50 lakh, but stamp duty value, purpose of registration is more than 50 lakh, then this provision is attracted. Take for example, in the up to 31st March 2022, the law is very clear. Consideration mentioned in the agreement should be more than 50 lakh. Take for example, we are going for registration. Consideration mentioned in the agreement is, take for example, 40 lakhs. But stamp duty value, the registered value or the guidelines value for that property, take for example, 75 lakhs. But you are registering for 40 lakhs. You pay stamp duty on 75 lakhs. Law says 194A, now it says from 1st April 2022, it says that you have to see consideration paid or stamp duty value, whichever is more. It means that in this case, if it is more than 50 lakhs, stamp duty value is more than 50 lakhs or consideration paid is more than 50 lakhs, TDS under 195 is attracted. This is what earlier, to avoid the 194A, they mention the consideration less than 50 lakh, no TDS. And they registered property for stamp duty value maybe 10-15 lakhs extra, and they not bother about this. Now this law is very clear. Stamp duty value for registration purpose is more than 50 lakhs. Maybe consideration mentioned in the sale deed, maybe less than 50 lakh. Still, this 194A is attracted. This is from 1st April 2022. Old provision, only stamp duty value is now is added as the consideration. Instead of consideration or stamp duty value, whichever is higher. This is another 194A which I mentioned earlier, where I said that 194A 5%, 206A attracted is 20%. Now they say 206A or 206AB. This is a new provision rate. You have to attract at 5% rate. 184R, TDS on a benefit of a perquisite in respect of business or a profession. Friends, this was introduced, the new provision introduced from 1st April 2022. It says very clearly, it says any person responsible for providing to a resident any benefit or a perquisite, and if it is more than 20,000, you are supposed to deduct 10% TDS on such benefit or a perquisite. Here is any person who is responsible for providing any benefit or a perquisite to a person is attracted. I'll explain what is this benefit is they're talking or a perquisite they're talking in respect of business transaction. In this, they say 10% of the value, you have to deduct tax source. No TDS if a benefit is or perquisite value is up to 20,000 in a year. In case of a person is an individual or HA whose total sales or a turnover or a gross receipt does not exceed 1 crore, these provisions are not applicable. Only if we exceed 1 crore, we are attracted. In case of professionals, more than 50 lakhs, these provisions are applicable. This is what the salient features of this new provision 194 are. What is this provision? What is this benefit? What is this how to track? Because only we can deduct on the transaction which we have paid by way of money or by any other thing. But here is a case where you have to value the perquisite or benefit and deduct TDS. See, TDS earlier, all the provisions earlier is TDS deduct on the amount paid or amount credited, you have to deduct TDS. That is very fine because when I'm making payment, I'll do. But here is a case where you deduct TDS on a benefit or a perquisite. What is this benefit? What is this perquisite? You can envisage now under 184R is, there is a, take for example, waiver of any liability. I'll take an example. You made a application to the banker for one-time settlement in which you ask for the waiver of some principal amount. There is a waiver of interest is as well as principal amount. You make an application. They give a benefit. Yes, we will grant you this remission of liability and granted. Then they are supposed to deduct TDS on this under 194R. Friends, this is a very, very, very practically difficult. When you have to calculate on what amount. And also they say very clearly, when this benefit is in kind as well as in cash, if it is a kind and partly in cash, then you have to see that as a deductor, deduct TDS before releasing the amount in kind. This is what the requirement of the law. It means I am supposed to pay amount in kind, then that is the case, you deduct TDS under 194R. After deducting 194R, then only release the amount in kind. Release the item which you wanted to give as a benefit or a perquisite. This is the requirement 194R. Friends, there are so many things which can be come under this thing, but only thing is envisaging what is this perquisite, what is this benefit in a respect of business or profession. Take for example, in case of a chartered accountant, suppose he gets a benefit from one of your client. He is paying 1 lakh rupees per month as your audit fee. But he provides you a service for which he is not charging any fees. Suppose he is an architect. He comes and help you in your construction of your property, construction of your house. And this is a benefit for which you are not paying anything. For this benefit, you are supposed to value this benefit and you deduct tax source under this. What benefit you are receiving is in kind, for which you are not paying anything, but you have to deduct tax source. I think, friends, this is a very, very thing. You deduct under 194 for which you are not paid anything, but this is a perquisite or benefit. You are not paid, but you have to deduct under 194N. Once you deduct under 194, reflected in 26 AS, in this case, as 190 deduction under 194R, if he deduct under 194R, he have to include his income, even though he has not received it in kind or not received in cash, but he received only as a chart accountant, he is advised. But for this benefit, you have to pay tax at what are the rate applicable, 34% rate. Is deducted only 10% TDS. This is the requirement of law. Benefit of perquisite in respect of business or profession is liable to TDS under 194, or it is a very, very interesting thing. Friends, practical also is a very practical, but as a deductor, you have to watch, see what is the benefit I received, whether for which you have to make a TDS under 194. This is a requirement. I think going to so many things can be grouped under this, and you fight for something and you get a benefit from the court, then you are not required to pay the amount to your creditor, then this will become the remission of liability. It is also a benefit for which you have to deduct tax. Which PAN number I have to mention? Creditor PAN number I have to mention. And I say that the income in his hands, there are going to be big issues, friends. Deduction is one part, then is the next part is the recipient, even though he has not received, has to pay tax on this benefit. These are all the requirements. You have to see how is going to be impact on the business entities. Next is 194S. Another provision is introduced in the Finance Act 2022. TDS on payment for a transfer of a virtual digital assets. Friends, now I don't know why Finance Minister has not introduced the TDS provisions on transfer of other assets. See, today you buy any other asset, if it comes under purchase, 194Q is attracted. Correct? 194Q is from 1st July 2021. But 194S on virtual assets. Suppose I am buying an item and 194Q says only when your buying item is more than 50 lakh, then this 194Q is attracted. In case of 194S, virtual digital asset, if it is more than 20,000 rupees, TDS is attracted. TDS is attracted. What is this virtual digital asset? Friends, you have to do a lot of exercise on this when it is attracted, how that you do. But here it says any person who is buying item have to deduct, and the TDS rate is 1% of the sum. In case of consideration transfer of digital asset, includes kind as well as the exchange, then partly in cash and partly in kind, but cash is sufficient to liability to deduct tax source. The payer has to see before releasing the consideration, ensure that tax has been paid in respect of such consideration per transfer. It means 194 CS and 194 are both are said partly in kind, partly in cash. You have to see that TDS is deducted and remitted to the government. That is the first part. Here is provisions of 203A, that is regarding obtaining TAN number is not there. 206AB shall not apply to the specified person. Here is virtual diesel. 206A is not applicable. If there is no TDS, if the consideration payable of specified person, value of the consideration does not exceed 50,000 in a financial year, and consideration payable to any other person is 10,000 rupees. Specified person is 50, other persons is 10. But specified person means where section 203A and 206 is not applicable, then that section. If it is deducted in 194, yes, then such transaction shall not be liable to deduction or collection of tax source under any other powers of that. They're very clear. God's grace very clear. They say 194, yes, if you attract, other provisions are applicable. I wanted to tell that 194, yes, and 194Q and 206H, all the three sections are applicable to some transaction. Take for example, is more than 50,000, virtual digital assets is more than 50 lakh. Then 194 S is applicable, 194Q is applicable, 206C in the hands of the seller is also applicable. But fortunately, in this very clearly say that TDS and TCS provisions are not applicable if 194S is attracted Other provisions are not applicable. This is a very clear suspense account or any account is attracted. Specified person in this case is in case of individual HO whose total gross asset turnover does not exceed 1 crore rupee. In case of business is 50 lakh is a specified purpose, and individual HO not having any income under the head business and profession, he is called a specified purpose. Then is 50 lakh, 50,000 and 10,000 threshold limit is attracted. What is meaning a virtual asset is defined under this provision. Information, code, number, token, all these things is there. I request all the participants to please read this and take the decision what is this virtual digital asset. Friends, I told you earlier, I have given the totally 7 circulars for your consideration. In this, the circular number first which I want to discuss is circular number 11 of 2021, dated 21st June 2021, regarding use of functionality under 206 AB. And I told you 206 AB and 206 A, you are supposed to verify whether the person has filed the return for the latest 2 years. If he is not filed, then he is a non-filer. Then 206 AB or 206 CA is attracted. You have to deduct TDS to more than 5%. This is the requirement. To verify that, they have introduced a circular in which they say how you can verify through a technology development. They have mentioned stepwise how to verify that. Okay. Next is circular number 14 of 28 July 2020. This is clarified regarding notification regarding provisions of 194 of the income tax, where you are withdrawing cash is more than 1 crore. What are the exemption available? In the 28 July 2020, they have given a clarification. You can refer to the circular whenever you have issues on 194N. Circular number 2017 of 2020, dated 29 September 2020, regarding when the section 194 introduced. Now all the new section, whatever the section they are introducing, friends, kindly note, they are telling very clearly any amendment or any clarification or any notification, the board or a government has a power to issue clarification. Therefore, under 194O is applicable to e-commerce operators. Under subclass 4, they say that you are power to issue some clarification. Accordingly, they issued a clarification on 194O under circular number 17 of 2020. Then is circular number 23 is a very important circular, 23/2017, dated 19 July 2017. This is very clear. Earlier circular issued in 2014, where they said whether service tax will be included purpose of TDS. Now they said very clearly, earlier service tax was excluded from service tax was excluded from the TDS. Now they say GST, which is introduced from 1st July. They said on 19 July 2017, GST should not be included the purpose of TDS under Chapter 17B. Next is 194Q. I told you, you have any questions on 194Q, please read the circular 13/2021. There is 6-page circular dated 3rd June 2020. It is clarified when 194Q is applicable, how to compute the threshold limit, how we have to compute that, they are explained in that. Then 13/2022, the recent circular, 22nd June 2022, it is given the how to read 194S, which is a virtual asset. They have clarified what is a virtual asset, how to calculate all these things. They clarified in a circular number 13 of 2022. Circular number 14 of 2020, dated 28 June 2020, regarding the deduction of 194S, how you have to compute stepwise. They have clarified that. Next is circular number 12/2020, dated 16 June 2022. This is regarding removal of difficulties while implementing section 194R, subclass 2. How we have to compute guidelines they given in respect of TDS under this 194R. These are the circular which I wanted to share with you. Friends, now I want to conclude. There is another 20 minutes time is there, madam. Yeah, what the time allotted to me is up to 6 o'clock. Now is 5:40. I am having a 20 minutes time. Any questions from the participant if it is there? Really? Otherwise, I will conclude the another 2-3 slides on the TDS provisions, obligation, consequences, which I can explain. It may be another 10 to 15 minutes time. Any questions is there? Any comes in a chat box? If it is there, I want to take up.
Requesting members to come up with your any of your doubts you have, please. Either in the chat box or you can unmute yourself and raise your questions also, please.
What is there?
So there is a question here in the chat box.
Correct. Sudhakar,
Shall I read it out, sir?
no. One of my client, correct, na?
Yeah.
One of my client during the
Running
a software company, having a turnover more than 1 crore and also having a 25 employees. Once in a year, the company is arranging a tour program to all the employees and spent 5 lakhs. Whether is it a perquisite? If yes, on whose hand the TDS to be deducted under 194R? How to calculate perks? Company provide lunch to all the employees. It is a coming under the 194R. This is a very interesting. After introduction of 194R, these are the doubts will arise on all the practicing chart accountant, even all the employers. See now, friends, ignore 194R first time being. Anything you have provided to your employees as a staff welfare measures, food or anything like that, in my opinion, this is not a benefit or a perquisite. It is a given as a software measures, a labor welfare measures, which is not. I will answer the second question, that is, the employees provided a lunch during a lunch time. Lunch provided. In almost all companies, they are providing a lunch in the afternoon, and lunch is less than some particular limit. It is not a perquisite, it is not a benefit to the employees. Next is, there is another question they have taken to some tour to the particular place and sent 5 lakhs rupees. And it is debited to the, obviously it is debited to the some workers' welfare expenses. And now they are asking question whether it is a benefit or a perquisite, and whose hands it is to be liable to deduct under 184R. Here is, yes, this, if you take that, it is a perquisite or benefit, here is 184R. Take. Sir, I'll read the 194R. He says that any person responsible for providing to a resident any benefit or a perquisite, whether convertible into money or not arising from the business or the occupational profession by such resident, shall, before providing such benefit or perquisite as the case may be, to such resident, ensure that tax has been deducted in respect of such benefit or a perquisite at the rate of 10%. Here his question is, who is getting how much benefit? Take for example, is a 5 lakhs is a total expenses spent for the tour of all 25 employees together, and how much benefit is reached by each employee. Suppose, so take for example, one employee is a non-vegetarian and drinking thing, and he may be all together is how much? In a financial year, if it is less than 20,000, this 194S is not required. Here case, in this case, 25 employees spending together is 5 lakh, is less than, how much is less than?
Per employee is 20,000.
Per employee comes to 20,000. If it is a less than 20,000, here is where 20,000, no? 20,000 or more than 20,000.
20,000.
Does not exceed 20,000. In the given example here is 5 lakhs divided by 20, it comes to 20,000, but it is not exceeding 20,000. Therefore, in my opinion, based on this example, this 194 R is not attracted. But other provisions of section 192, while deducting whether you have to consider this is a perquisite benefit, that also. But definitely, I'll tell the question raiser, Mr. Tambudurai, Tamaraj, that yes, this question will arises very difficult. You have to see, because this is a provision introduced only recently. You have to wait and see how it's going to be implemented. But my view is, any benefit is provided to any employee, in my opinion, it is not a benefit or perquisite to any. It is our company policy to provide once in a year, going outside, picnic and enjoying. That is our past of our this one. It is not any benefit to anybody particularly. Here is, it should be a perquisite or it should be a benefit to an individual. Here is no such benefit or perquisite arised to employees. Therefore, in my opinion, 194 is not attracted. If it is attracted, if it is less than 20,000 per person or per, is not exceeding 20,000, then 194 R is not attracted. Next.
So we have come across some notices where Asian Paints have taken its employee like business people, like they are distributors to a foreign tour, and they have spent around 3 crores or something, 3 crores or 30 crores something. And they have from the income tax department, they have received a notice telling that you have received perquisites in the form of like a foreign tour, which you have not disclosed in your return of income as for your other income. And this client doesn't have any details of how much was spent for him. There is no individual benefit available. And it is a notice telling that the company has paid so much and so much, and you're a part of one of the person who have taken that benefit from the company. And why not be send a show cause notice asking you to include this in your perquisite and file your return of income.
No, I just purpose of
it is a valid notice without giving details as to how much is my portion of the benefit and things like
correct,
that.
madam. In case of a group tour, how you can ascertain this amount is so much is belongs to this person, so much is belongs to person, are dividing equally? It is not correct. Depend. But in this given example, what our friend has given earlier, 5 lakhs for all 25 people together, correct? In which, how much is the benefit to one person? Suppose I am a non-vegetarian, I eat non-vegetarian, I eat drink, all this, my utilization in that maybe 30,000-40,000 rupees. Another person who is eating only the rice and sambar, he may be 1,000 rupees. Like that, it is very, very difficult to ascertain and say it is a perquisite. Unless you spend only one person, one family, you spend them, then you can say that this benefit you are taking. But the benefit is given to group of people, and it is for the all people together is spent in, I think, issuing a notice, and they say that this is the benefit. Let them tell how you already the benefit. How you calculate this benefit to me? I have not received any benefit. I have not received anything. It's no personal thing. This is as a group, we have achieved all group performance is there. Based on that, all are entitled to, all sales people working in this particular region are entitled to go for, but I went to enjoy that. Therefore, it is not any purpose. But income tax department, madam, they without any logic, without any legal background, they'll issue notices. There is nothing wrong. But especially the taxing in my hand, how much is belongs to me, how much they can add in my hand, where maybe 204 charges plus stay charges plus other expenses, how they can evaluate. Sir, madam, for any perquisite or benefit, there should be a valuation rules. Under the rule 3 and rule with our relevant rules of income tax, rules 96 valuation of rent-free accommodation, there is a rule. For the gas, everything, car, driver, everything, what are the perquisites? There is a rule. For this, where is a rule? How they can value it? When a rule is not there, in my opinion, they cannot quantify this is the benefit or this is the amount on which you have to pay tax. It is not possible, especially in 194 or TDS also. At the time of TDS, how I can value all this? In case of income, there is a event happened, then. But before having event, I have to think, TDS provisions. Then I have to tell the client, say, this is the likely problem for in your case. These are the issues that likely arise. How you are going to look into this? I think this is the thing you have to very think. Anyhow, in the Income Tax Act, there will be a series of questions on any thing. But
yes, alternatively, they can disallow the expense in the hands of
the company. Not in my hands as
yes.
That is permissible. Yes. That is permissible.
But they have done it this way. And regarding this yes, obligation which you have given now, the issuing certificate, is it mandatory to download the certificate from the portal? Because in case of 1 or 2 persons to whom we are paying and we have a common understanding that.
I'll take this and explain, and I'll explain. I'll take that to your question also. Friends, okay, under Chapter 17B, there are 59 sections. Today I touched only a few sections. There are 59 sections under Chapter 17B. You want to say that I know some TDS provisions, you have to be very well versed in 59. Anybody can tell me how many sections are there in the Income Tax Act? Friends, for assessment year 22-23, there are 766 sections are there which are relevant to this assessment year. There TDS is only 59 sections under Chapter 17B. Under the Chapter 17B, as a deductor, today what we discuss only in the hands of the deductor, what are the obligations. As a deductor, I have an obligation to deduct taxes source as per Chapter 17B, deduct and remit. First year I have to deduct, next I have to remit to the taxes to the government. That is a next month on or before 7th, and whatever they related to March, you have to remit before 30th April. After deducting, after remitting, you have one more obligation to file the quarterly return. 24Q for salaries, 26Q for other than salaries. That you have to file quarterly return. If you have not filed quarterly return, there is an interest under, filing fee delay is there. The 200 per day of default, all the 6 you have to pay. Then issuing certificate. In case of salary, you have to issue certificate annually. Yearly you have to issue. After the year is over, after 30th April, 15th May you upload, then you have to issue the form number 16 in the certificate into all the employees. That is a once in a year on it. In case of other deductions, you have to issue certificate on a quarterly basis. 15 days from the date of filing your quarterly return, you have to issue the certificate in 16A. But there is an obligation of the deductor to download the TDS certificate and give to all the deductees. That is an obligation of the deductor. If you are not done, 100 rupees per day of default, you have to pay additional penalty to the government. Downloading, that is what you have to download and give to all your deductees the certificate of 16. Now I uploaded, it is already available in 26, why you need it? But that is a secondary. But as a deductor, your obligation to give the certificate to all the deductees within 15 days from the end of the 15 days from the due date for filing your quarterly return in 26Q and 24Q. This is the requirement. Madam, what is the issue? That is what you know. There is only on anything.
Yes, I'm asking whether it is mandatory or
because
mandatory. Nowadays when we log into the portal, it says you have not downloaded your TDS certificate. And please kindly download.
Issuing of downloading 16A is an obligation of the deductor. Giving a certificate to the deductee is also obligation of the deductor. It is a requirement. If you are not done, 100 rupees is the fine for a day under 272A. That is the fine.
Okay. Okay, thank you, sir.
What I told under Chapter 17B, this is the deduct, remit, all these things over. What are the consequences? The consequences are, one is interest under 2011A. Under 2011A, for non-deduction TDS, interest is 1%. But deducted, not remitted to the government, interest is 1.5%. This is the interest under 2011A, and disallowance under 40A1A. Friends, you know, as a businessman, if you have deducted, not remitted, or non-deducted, then you are liable to disallowance is 30% of that expenditure will be disallowed under 40A1A. Earlier 100%, now is recently, not recently, already over 5 years, it is now 30%. There is one consequence is interest, next consequence is disallowance, third is penalty. Under 271H, there is a penalty for not filing the quarterly return or filing a quarterly return, but you are not billed properly. There is a misinformation, mistake, error. Then penalty is 10,000 to 1 lakh. Is a penalty is there for not uploading the information correctly. Prosecution under 276B is a very important. If you have deducted and not remitted tax to the government, you have deducted, not remitted tax to the government, penalty under 276B is there. Prosecution is free boarding, lodging in a government guest house, minimum 3 months, maximum 7 years. This is the prosecution. Suppose you don't have a prosecution, then you can go for a compounding. First time compounding, 3% of the defaulted amount is the compounding. A second time is 5%. After that, over. Only lifetime, 2 times you can have, or 3% and 5%. Then after the compounding is not permissible. Friends, kindly note, your obligation you have to discharge as per 17B. Time schedule, deduction, correct rate deduction. You should not have any short deduction or delay in remittance or short remittance. All this amounts to a violation. Therefore, you have to deduct correctly, remit in correct time, remit the correct amount, and remit within the due date. If you do that and issue certificate to the all the recipient and file your quarterly return, I think you have completed. There will not be any consequences. Friends, with this, I want to thank each one of you for giving an opportunity to share my views on that.
One more question in the chat box.
Yes.
In Traces portal, assessee has demand pending. However, assessee could not retrieve data from its office, such as provisional receipt and form 26Q or 24Q. How to retrieve those details and clear the demand notice in Traces portal?
Madam, this is for this. Actually, you have to go to the help desk of the TDS department. There is an help desk. If anything connected to not downloading information or you are not having a clear about the demand, which year, which quarter, all these things, you go to the help desk of TDS department. There is a TDS department help desk is there. They will help you. If you give your TAN number, they will download what is the demand, why demand, which quarter, what are the mistake you have done, or what is the thing they are not in a position to link it, and the challan linking problem. All these things they will identify the issues. Then if you set right, then you can make the payment. If it is any amount demand is outstanding, that you have to approach the TDS help desk.
Yes, sir. Thank you, sir. Thank you very much for your beautiful explanation of each and every section in a very categorical way, sir.
Thank you.
I request our Secretary CA Venkatesh to formally give his vote of thanks to you.
Good evening to one and all. It's my privilege to offer vote of thanks on this occasion. On behalf of MBSARC of ICAI, I extend a really sincere thanks to our speaker, CA Dr. Venkatesh sir.
Thank you, sir. Thank you.
Valuable time to address our member on TDS updates in spite of his hectic schedule. Very elaborate explanation on the above subject, sir. Your session is very interesting one, sir. Thank you, dear Venkatesh sir.
Thank you, sir. Thank you.
Thank you, sir. It gives us immense pleasure to thank all the past chairman, fellow members, women members, and junior members for being here and for their effective and lively interaction on the above subject. Thank you. I also thank all Madurai branch managing committee members. Again, I thank you for being with us this evening. It's great pleasure. Thank you, sir.
Thank you. Thank you.
Thank you very much, sir.
Thank you. Thank you.